This is a story you probably are hearing about for the first time on this show.
There's a theme with all of these stocks. All of the sudden, kaboom, the air comes out of them. And when I mean comes out of them, this stock first fell 10% in a matter of minutes, and before the end of the day was down 95%. So it went all the way down to 53 cents from $9 in a single day, actually in several hours.
That's veteran financial journalist Herb Greenberg, my friend and the editor at Herb Greenberg's Red Flag Alerts, discussing a stock scam that, yes, hit one company super hard in the last 2 weeks, but which he says is spreading, involving other companies, and nearly impossible for the authorities to shut down. That's in our big interview, but we start today with Anthony Holds, principal at Holds Wealth Advisors, a Northwestern Mutual affiliate, talking about Northwestern Mutual's 2025 Planning and Progress study, which showed that nearly 70% of Americans say financial uncertainty has made them depressed and anxious. And in the market call, Dryden Pence, Chief Investment Officer at Pence Capital Management, makes his debut on the show, talking stocks that can dominate the choke points in supply chains.
Welcome to Fantasy Island.
Yeah, the fantasy is not that you can dominate the choke points in supply chains. That's not it at all. You can definitely find companies that do that, as Dryden Pence will explain. The fantasy is the story that investors were falling for that made them the victims on the wrong end of Austin Technology, ticker OST. That is the stock that Herb Greenberg is going to be talking about. But it's not so much about that specific stock. Like, it would be easy to go, well, hey, I don't own it, I don't really know about it, and whatever. No. That's not how this one works, because the idea here is what was done with this stock. And you will hear both Herb and I say, we don't actually necessarily know that anybody at the company was doing anything wrong. We just know that things were being manipulated, and in ways that could be manipulated further. There's a lot of stuff to chew on. And in fact, I do worry listeners here could be victims of stuff like this. And not because I think anyone here is particularly naive. What I say all the time about Money Life listeners, most of our audience is above average investors who still think they're average investors. In other words, they came here going, I want to learn more. I'm trying to get a better handle on my money. Maybe an average investor trying to become a better investor, and they don't feel that they've necessarily improved, because you don't when you do this every day. But if you've listened to the show for a couple of weeks, you are de facto a better investor. You're thinking about more things. You're processing more critically. You're coming up to conclusions where they're based on multiple opinions from really solid sources. Well, think about what happens there, because one of the things that Herb talks about is how there are now a lot of AI fakes out there. And while to the best of my knowledge, nobody has faked me and nobody has faked Herb, and we discussed that too, people have faked real experts, this guy from Goldman Sachs or that guy from Fidelity and what have you. You could literally be looking at something going, I heard that guy on Money Life, and now I'm being invited into this group where they're going to tell me whatever about, his next great stock pick. That's what scares me, because separate from whether or not you can figure out that it's a stock scam, you're going to have to figure out, like, is that real or is that AI generated? What we know is that all of the AI fakes and all the rest of that stuff getting far more sophisticated and better all the time. So you have to be less trusting. And yeah, when you hear how this scam worked on Austin Technologies, what happened and what people were still believing, please protect yourself. Please remember that this stuff is out there and it's not impacting you. You can make good returns in the stock market over time, but you can't necessarily get rich overnight. And you should be trying to get the good returns and doing it in ways that you can sleep at night. And I'm just not sure how anybody who is doing this truly felt they could sleep at night, other than, hey, I'm looking and it says my account balance is up, or I'm looking and it says the stock is up. There has to be more than just that. So it's a great story. It is well told. And oh, by the way, we need to get to it. So remember, you can reach me, Chuck at moneylifeshow.com. I would love to hear from you. But right now, we need you to hear from our guests. Again, it's Tony Holds, Herb Greenberg, Dryden Pence. We're talking about depression and anxiety next, but hopefully this show won't make you feel any of those things. It'll just make you feel better informed. Stick around. Now Money Life looks at what the survey said. Yes, this is the survey said on Money Life. It's where we dig into surveys, studies, polls, any kind of research or data that's going to help us understand what people are doing for, with, and about their money. And today, we are digging into the latest wave of research that has come out of Northwestern Mutual's 2025 Planning and Progress Study. Now, this is one of the most detailed studies of consumers and investors that is out there, and they kind of release it in waves, and we find ourselves several times a year discussing some of the things that they are doing and releasing. And today, we're looking at financial anxiety and how that is impacting Americans' financial life. And to me, it's a particularly interesting study to look at because we've had other things on financial anxiety and financial stress. Heck, it's Mental Health Month. We've talked about studies that talked about mental health and money and being related, et cetera. But this one is a little bit different because it's always focused in with Northwestern Mutual study on planning and how planning helps with that. Here to discuss it, Anthony Holds. He's a principal at Holds Wealth Advisors, which is a Northwestern Mutual affiliate. And by the way, if you want to find the Planning and Progress study, look in our show notes or where you find Anthony on our guest page, and you'll find the direct link there. Tony Holds, welcome to Money Life.
Hey, thank you, Chuck. It's great to be here.
Americans are saying financial uncertainty is making them feel depressed. The headlines that we've been seeing are having a real impact. Like the stress and anxiety levels are palpably higher this year, aren't they?
I think they are. I mean, certainly over the last number of years, we've increasingly been in an environment that we feel as just people and advisors where there's just a heightened kind of baseline of tension. I think, everybody's kind of plugged into what's happening in the news. Certainly the news cycle is always driven by some elements of wanting to keep people in a state of concern. And so, yeah, we're always sitting with clients who are super concerned about what's going on in the country, what's going on in the world, and how it's going to affect them financially.
We've had people on the show talking about men and women sort of separately in studies that studied them separately. You studied both men and women, and 1 in 4, so 25%, said they're being kept up at night with financial concerns at least once a week. Did it at all get into what those financial concerns are? Like, I'm wondering what's keeping them up at night. Is it, I went to the gas station today and I saw it was so much higher and that's got me freaking out afterwards, or I bought groceries today. Like, is there anything that specifically we know is this is what's keeping them up, or it's just the stress levels keeping them up?
Well, I think it's financial stress kind of writ large, Chuck. I mean, certainly over the last several years, whatever headline is concerning people in a given moment, whether it be inflationary impacts over the last few years, what will tariffs now do to that situation, or other aspects. I think it's a little bit diffuse in terms of the stress. I think the biggest piece is that people are just concerned because they don't understand the direct connection between sort of what is happening in the wider world and what is going to happen with their finances. I constantly talk to people about, what the impact on the markets is going to be of this, that, and the other. And the thing that I'm always talking to people and trying to help them with is to get their eyes back kind of on the longer term and helping them understand that in any reasonable case scenario, even if things go kind of poorly as they might view it through their particular personal or political lens, we're not at the end of financial history. Companies are still going to find ways to innovate and create value. And so, remaining invested and not kind of panicking or making some sort of radical over rotation based on the sort of stressor of the day is really important.
I probably misquoted the number or didn't necessarily hit the right headline note because it's 1 in 4 say they're kept up at night at least weekly, but it's almost 2/3
Right.
of Americans saying, according to the study, money worries have kept them up at night. And the other side was that although we said that the headline number, the 8 percentage point increase in terms of money and financial uncertainty make them feel depressed and anxious, it's a bigger increase in terms of the number of people who say this is impacting their relationships, that whether it's their spouse or their partner or what have you, it is dramatically higher. I'm curious there as well. Is that spending thing? Is it about bringing more and different financial priorities into the relationship and, tighten up the big picture means we tighten up the small picture and what you could let go in your relationship before, he likes to place a bet. She likes to spend a little too much at the grocery store, whatever. That's now doing it. Or is it, how are we ever going to save for retirement that's doing it?
Yes, I would say all of the above. I mean, certainly you probably saw in the study that millennials and Gen Z are kind of the most dramatically impacted in terms of the findings. About 3/4 of millennials, just under that, and Gen Z are reporting that financial worries are meaningfully affecting their serious relationships. And I think as an advisor, certainly we're at ground zero of those types of conflicts. I mean, I've certainly played the role of marital mediator or counselor a number of times in my office. And generally, it's just misalignment in terms of one spouse wants to run the family finances like a business, and the other is more akin to sort of, or more inclined, I should say, to run the family finances like a hobby. And you can draw your own conclusions of who may more traditionally fill those roles, but that creates a lot of friction. And certainly also, to your point, budget issues are huge as well. When people have a high level of kind of environmental tension, ongoing stress about kind of what their life's going to look like if that eventuality occurs, they get more kind of focused on, hey, we need to rein in our spending, and generally there's a misalignment. I say generally, I would say frequently there's a misalignment between married couples or people in a committed relationship around, how serious they should be about budgeting, spending, saving, et cetera.
There is a solution for this anxiety that is not just involving, could you make changes at the governmental level to stop some of the stuff that has been going on that has been stressing us. And that boils down to financial planning. And I understand that you guys are speaking from the book.
Yeah.
And I will tell you that one of the things that the Planning and Progress study shows routinely has been the value of planning. But I'm curious from your level of experience, when we say that planning helps reduce anxiety, at what point in a planning relationship do the folks recognize that and tell you that that's what's happening? Because that's not what they come to you for. I say all the time, you talk to a financial advisor to get emotional discipline, but nobody goes to a financial advisor thinking, hey, I need emotional discipline.
I would say most frequently the coming in deal is either a very transactional, hey, I wanted to, see what I can do with these retirement accounts for my previous employers, or hey, we need to, get some life insurance because we're going to be applying for a mortgage, or hey, I'm approaching retirement and wondered if I should, utilize an annuity, or either something hyper specific like that, or, they just assume that it is going to be data driven. And so I don't think anyone really walks into the conversation like, hey, I looked you up, or I got an introduction to you because I was looking to kind of take down my anxiety levels. I've never had anyone show up with that, but you asked kind of when it manifests in the relationship. And I would say almost immediately. One thing I think is certainly true when you're taking someone through a genuine financial planning process is that even if they showed up thinking that interactions that they may have had with financial professional A or financial professional B, even if they show up, or I should say often they show up, assuming that those interactions are kind of the book on how this stuff works. And as soon as they find themselves in a deeper planning conversation, it kind of dawns on them how holistic, how personal, and how much deeper this goes than just, hey, how can I create alpha in my non-qualified portfolio or whatnot.
Ultimately, that's why it winds up reducing the anxiety. And again, they didn't ask the question about, did you find that this did it? It's just that they find that folks who do that have built it in and wind up with less anxiety. So in the end, what you're talking about is
plan to be surprised.
Yeah. And we've had plenty of surprises. That's what's creating the anxiety, but planning will help get rid of it. Tony Holtz, thanks so much for joining me on Money Life.
Absolutely, Chuck. It was great to be here.
Anthony Holds is principal at Holds Wealth Advisors, which is part of Northwestern Mutual. That's why we've been talking about Northwestern Mutual's 2025 Planning and Progress Study. Learn more about the study at the link that we've got in our show notes or on our guest page, where you can get more information as well about Anthony Holds. Speaking of planning, plan to stick around because we've got more to go on today's show. We are living the money life, and there's no stress in that. I promise, and you'll prove that again right after this message.
Asset managers, you know how hard it is to stand out in this crowded space. Vetify is a unique partner that can help you across the entire product lifecycle. With a best-in-class index factory and an award-winning digital marketing team, Vetify can help you build the products of your dreams, optimize your distribution efforts, and grow your assets under management. Learn more at Vetify.com.
Welcome to the big interview on the July 2nd edition of Money Life. Joining me now, Herb Greenberg. He's editor of Herb Greenberg's Red Flag Alerts, and you can learn all about it at herbgreenberg.com. He's Herb on the street, frankly. That's what he's been known as for a long time. He's the founder of Herb Greenberg Research, again, herbgreenberg.com, and we're specifically going to be talking about a story that he wrote called Don't Fall for This Stock Scam, and it's the story of a China tech stock that he warned about. And then 2 weeks after he warned about it, the stock cratered and lost 95% of its value in a day. It's a fascinating story, but it's also a story that you could take out the name of the company involved, which is Austin Technologies, and you could put in other names because it's happening over and over again. We've got a direct link to Herb's story in our show notes or where you find him on the moneylifeshow.com recent and upcoming guest page. Herb Greenberg, it's always great to have you here on Money Life.
Always great to be here with you, Chuck.
I love this story and I hate this story because the really interesting thing is that normally if you and I were talking about some sort of a penny stock scam, we would be talking about something that took in people who were not knowledgeable investors, who were like on the fringe of everything, who decided they'd be penny stock investors and try to play that game. This does take advantage of some folks that are not knowledgeable, but it's also catching up on some Sharpies and some people who should know better. So set it out. Tell us a little bit of the backstory on Austin Technology, ticker OST.
Okay, OST, Austin, OSTIN, that allegedly makes OLEDs. And this is not really about Austin itself, because I'm not saying that Austin is a scam or anything like that. I'm saying that it is among a number of companies that have been utilized by stock scamsters, possibly in Asia, who have taken advantage of, and by the way, most of these are not sophisticated people, meaning they're not investors. They got caught up in a scam that the Wall Street Journal actually wrote about a few weeks ago, not about this company, but another company. And in that case, you had a situation where it was people in Malaysia. The FBI actually got involved. But what the scam is this: if you see these ads on Facebook or in social media, and there's someone famous, like in the financial community, heck, they could take me, and they look like they're speaking. It sounds like their voice. It's really AI generated garbage. They telling you about to join their WhatsApp group. And so you say, hey, this sounds good. Good old Herb is inviting me to his WhatsApp group, and his buddy Chuck is along with them, and I trust these guys. So you come to the WhatsApp group, and suddenly there are all sorts of people who are administrators who are telling you how you have to submit a certain amount of money, give them a certain amount of money, they'll tell you where to send it, and you are going to make this stock, they are going to orchestrate higher. They basically lay out the illegal manipulation in these WhatsApp posts to this group. And people who know nothing think, hey, these guys are showing me how I can make money. And what usually happens is you go in, you'll actually make some money on one or two stocks, and then they've got you hooked. Now you really trust them. And what happens is you go in, as people did to Austin Technology, which not that long ago was almost a stock that barely traded. When I first wrote about it, 2 weeks ago, stock was $7 a share. A few days ago, I looked at it and I thought it was $9 a share. I said, this is crazy. What's it at $9 a share? Within an hour, a friend who had been talking to me about this company calls me and says, oh my goodness, this must be the rug pull, because there's a theme with all of these stocks. All of the sudden, kaboom, the air comes out of them. And when I mean comes out of them, this stock first fell 10% in a matter of minutes, and before the end of the day was down 95%. So it went all the way down to 53 cents from $9 in a single day, actually in several hours. Then, by the way, right now the thing trades at about 15 cents. So the stock has been, it's part of a ploy. And what's interesting is I have heard from people from all over the world, Chuck, all over the world now, who are they've lost $20,000, $100,000, $300,000, their retirement savings, because they believe these fools. And here's the key part, as I was doing my research on this. What these guys do is they take legitimate financial planners, it's often financial planning firms. They take a picture and say, Chuck Jaffe, who you're a financial planner, and and it's Chuck Jaffe and Associates, they'll put your picture up on the website. And if you ask, hey, where's your website? They'll give you a URL, but it'll be Chuck Jaffe's Wealth Creation or something. They'll add an S, and you'll just naively click on it, and boom, there it is. Everything looks like the actual legitimate website, except, assuming you want to call them and really talk to Chuck himself, the phone number's been changed. Of course, you don't know that because there's a lot of movement here, and you're now trusting these people. And I want to tell you, this scam is so bad that after the scam occurred, after these people lost money, I heard from a number of people who said, well, wait a minute, what's the scam here? Because they're telling me I'm going to get my money back, and they're asking me to put more money in for the next idea. And I'm thinking, oh my gosh, what is going on? But here's the worst part of it. Since I'm hearing from people from Israel, the UK, Asia, all over, what I will tell you is, I don't believe this scam can be eradicated. I don't know how they eradicate it, because I'm not sure and clear how they ultimately will find the people. Now, that said, the FBI did recover a decent amount of money from one of the stocks where there was a scam, and I think was able to return it to the people. They actually got to the bank, whatever bank they were using, they were able to get to that bank, put a hold on it, and then they put out indictments on like 7 people who, of course, they'll never catch. So this is the kind of a scam, and that to me is indicative of where we are right now and what I like to call the golden age of grift. And there is no cops on the beat. No one's going after them. And what's worse, you look at these, they go, hey, it trades on the NASDAQ, Chuck. But if you look closely at a lot of these, it trades on the NASDAQ, but there's a little, I think it's the CM after it, or whatever the thing is. It trades on the NASDAQ's equivalent of the Vancouver Stock Exchange. In other words, it's the NASDAQ's come on, come all, Chuck and Herb can list here because we need the listing fees and they meet the very meager listing requirements, but you get to say you're on the NASDAQ. So people who know nothing about the market are easy marks in this, because they see the NASDAQ setting new highs, and this is a Chinese company. They may not even really know it's a Chinese company. And all they know is it makes OLEDs, in this case OLEDs, but there are other companies. This is a list of companies out there, one after the other, gets targeted by these companies. And they tend to be companies that weren't trading much before. Maybe they had done a reverse split and then another reverse split, and the NASDAQ said no more reverse stock splits. And it's, lights out after that.
It's really nefarious stuff. And yeah,
totally.
You and I should both make the warning to people. If you ever see Herb or I supposedly touting a stock and saying, come join our private groups, yeah, that's not a thing. That is distinctly not real. Somebody is out there scamming. But the other side of this, I will just point out that as you and I are recording this on Tuesday early evening, just a couple of hours ago, there was a story on a site called tipranks.com basically talking about OST stock and saying they completed a $5 million direct offering. One thing that you pointed out, we don't actually know if management is somehow in any way tied to this. In a penny stock scam, while there are penny stock scams where management
Don't
is
know.
involved, there are other penny stock scams where somebody just says, I just need a vehicle. It doesn't make a difference what the vehicle is. Just give me the most believable thing that I can manipulate.
Well, the company did issue a statement saying they didn't know what was going on, and that would be their final statement. I will say the company did not issue a statement when the stock was going to the moon and when the stock was crazy trading like it shouldn't be trading. And I should also mention that if people are talking about this wonderful direct stock offering with an unnamed, I think it was an unnamed investment bank, an institutional investor, that's the way the press release put it. Well, that further dilutes everybody who's in there already. So what's the point? They're raising $5 million. Who is getting that $5 million? And again, I would say, where's the NASDAQ? Why are they, and here's the interesting thing. I first heard about this from some folks who had infiltrated this group, because people who short stocks can see that there is an opportunity here because now there's a pattern and you can follow these and you can see what's the next one, and then they can game what they want to do with it. I used to say this about companies where there's a problem. If short sellers know about it and stockbrokers know about it, because I heard about it from another friend whose stockbroker had called him and said, watch this stock. This is what's going to happen with this stock. And if they know about it, how can it be the feds don't know about it? But more than that, I come back to, where's the NASDAQ? The NASDAQ, they are not policemen, remember. They don't, but where somewhere this tarnishes their reputation, even if it's in the come one, come all aspect. So I think these things right now, we're in a market where there's a lot of things where a lot of people see their friends making a lot of money. It's like 2021. Everybody had a SPAC. Everybody had to be in a SPAC. Everybody, oh my God, this is the latest one. Oh my God, I've heard. And everyone was talking about them on their podcast. I feel like we're in that period again, even though obviously this isn't 2021 because interest rates are a lot higher. But I think we're in an interesting period where we're going to see a lot of this. You have to be on your toes and you have to try to check, your emotions and understand your discipline. And always the one thing that hasn't changed after all these years, Chuck, there's one thing that hasn't changed, because a lot of things are different. But one thing that isn't different is if it sounds too good to be true, it is too good to be true.
Yeah, absolutely. The other thing about this, it's not just the NASDAQ to me. It's that when this was priced, as you point out, when it was $7 and you're looking at it, penny stocks, we call them penny stocks, but technically they're now anything that's under $5. Most investors don't necessarily know that. But if you're under $5, it's a penny stock. And if you're under $5, there's not really going to be much short interest, et cetera. But once you get above $5, there's somehow now more of an air of legitimacy. Oh, by the way, short sellers, much easier to get involved, et cetera. So do you think that that's also kind of a price target? If you're watching these things and you see them, people should be looking at stocks under $10 the way they used to look at stocks under $1 and just kind of naturally be, skeptical?
Well, what I would do is I would go and see what the history of these companies were in terms of, did they do reverse stock splits? Where did they come from? How long have they been trading? What's the reality of them? What kind of money are they making? Were they, if you have a $50 million market cap stock that, as this one did, traded at $700 to $900 million, almost $1 billion market cap. And with volume, I should add, that was unbelievably 15, 20, $30 million, 30 million shares a day, whatever it was, whatever the high was, it was like that kind of crazy stuff. You have to ask yourself why. And if you don't, but again, you and I are talking to people, and I don't know who your end market is, and a lot of people get it, and I can only hope that people listening to this are not sophisticated investors, but for some reason they're out there, they're less sophisticated, and they can easily be gullible and fall into this trap, because I almost view what I wrote, because this was kind of off brand for me, even though it's a red flag. It's not the kind of thing my subscribers tend to be as interested in. It's almost like a public service announcement, because you see it, you feel it, and you just want people to know about it. And that's what you and I, as former journalists, what you and I did is, this is what we we have we have senses for. It's a,
Well,
for better or for worse, it's a honed sense.
Well, for me, it's totally on brand. I don't write stupid investment of the week anymore, but had I been seeing this on the upswing, I would have been looking at this, doing, seeing and having the skepticism. I want to ask an interesting question to you because you and I have been doing this for a long time. And there are a lot of things that we used to be told. I was just talking about the penny stock side of things, but it was always don't chase yield. And if you see something that's got a double digit yield, they're in trouble. But we see a lot of double digit yields these days that are being created. Maybe it's an ETF with a covered call strategy, or it's a BDC doing private credit, things along those lines. And those are, when you dig into them, you're going, I can't really denigrate that yield. It is a double digit yield that, while it could change dramatically based on market conditions, at least for the time being, it's not that, what is this goofy thing? They've got to be headed for trouble. So as we create more hybrid products and we make, we were just talking about auto callable options now being in an ETF and things that the average investor, heck, guys like you and me, struggle to understand auto callable options versus callable options. As those things become legitimized and they get talked about, are more people likely to be falling for scams because you can make almost anything sound good and legitimate when you have something wacky that somehow is legitimate, even though it, stretches our imaginations a bit.
I think you have to assume that, a lot of people will make money on these just as they have in all the double and triple levered ETFs. And then when things reverse themselves, they'll happen in a heartbeat and they'll potentially lose a lot of money. And I think this is where people who do serious technical analysis probably are ahead of the curve because they can trade in and out of it because they have the way using their interpretations of the charts, and everybody does it differently. They can have their buys and sell points, and if they stick with their disciplines, can try to, and they can hedge themselves and do things like that. I think like with business development companies, BDCs, as you mentioned, look, I was writing red flags on some of these back, 15 years ago. Some went away, some disappeared, and I'll never forget. They'd say, we've never missed a dividend payment, or we've never done this. Allied Capital. There was Allied Capital. There was another one. And, you can't restate a dividend. I will never forget that one. You can't restate a dividend because, there was a lot of tug of war, bull bear tug of war in these. Some did go away, and others actually, if you understood the business development company model, actually succeeded and survived and thrived. Private credit is a separate issue right now. And most of us, I don't follow private credit. I could rather talk about private equity, to be honest. And I know that, but on some of these ETFs, Jason Zweig at the Wall Street Journal just wrote about one 3 days ago, about high yielding instruments. And he does this very well because it's just sort of in his wheelhouse. I think high return, high risk, high return, high risk. It's the way, even with the business. And you know what? You can get a stock that has a higher risk yield. I own a pipeline ETF that yields 7-8%. They're collecting the money. The money's coming. It's natural gas. They just are collecting the money. I think the risk with that is a little less. You have some companies where there will be a little less risk, but there's still risk associated with it. Suddenly natural gas, suddenly turn off the spigot, that goes away. So, you can look at different things. You have to look at them each individually. And there are companies, with a company that has a high yield, you always have to ask yourself the same question. Can they cover that yield, or is that yield at a risk because you're being paid to wait? And is that yield at a risk that they're going to end up having to cut the yield? Are they, what's their balance sheet look like? And this is stuff that for most people, they're just not going to look at or think of unless they can do the analysis themselves. So there's a lot of dynamics right now, but we are in a different type of a market, Chuck. And I do think it's a market where, because of so many variables that have been laid out by so many people, whether it's the pod shops or the algos and you name it, the Robinhood crowd, the retail crowd, the power of the retail investor, the power of the investors in various parts of Asia, where suddenly there is a market being made there in stocks here. So, I don't know. I think you have to just know that there are a lot of games being played, and, usually the retail guy is the one who will lose, although the retail guy has been ahead of the curve on certain things these days, and they will be until they're not, or which may or may not be. I can't see the future, neither can you.
Right.
But I just know when I know what my risk tolerance is, and so I have to abide by that.
We also can see one thing into the future. this is not the last scam. And whatever the next scam is also not the last scam. So I'm going to leave with one question, because as we point out, and I'm going to say it again, we do not know if OST is truly a legitimate company, if anything's going on.
Well, they have a business. They have some revenue. I mean, but I haven't done the work on the company.
But have you ever seen a company go through a loss of, say, more than 90% in a day or so? Any event that could trigger that, and gone back like a year later or 2 years later, and that company still exists?
No, those are usually busted companies, and those are usually damaged, and they were gamed one way or the other. Every now and then there's a company that falls a bit and stays down for a number of years, but this one has a lot of hair on it. Let's just put it like that. Not just this one, the ilk of them, as I say. And it's unfortunate that these happen to mostly all be Chinese companies, because this is not a denigration of China or Chinese companies. It's a denigration of the scamsters and the scam.
It is a great piece that's got other links to it. And of course, if you want to get yourself informed on a lot of different things, Herb Greenberg's Red Flags Alert. It's there at herbgreenberg.com. Herb, it is always great to catch up with you. Thanks for joining me on the show.
Thanks so much, Chuck. It's great to be with you.
Again, Herb Greenberg, editor at Herb Greenberg's Red Flag Alerts, herbgreenberg.com. The link directly to Don't Fall for This Stock Scam, the story of how a China tech stock I warned about just 2 weeks ago just plunged 95%. That is linked up in our show notes and on our guest page. Up next on Money Life, it's market call time. Dryden Pence of Pence Capital Management will be here talking stocks when we come back in just a moment.
VettaFi is the partner asset managers rely on across the entire product lifecycle. Learn how you can build and support the product of your dreams at VettaFi.com.
Dryden Pence, Chief Investment Officer at Pence Wealth Management, is here. We're talking stocks, and it's time for the Money Life Market Call. Welcome to the Market Call, the part of the show where we talk with experienced money managers about how they do their job, what they look for that determines their buys and sells, what they see happening broadly on the market, and how they are putting it all together. We know you like hearing from new and different voices. Making his debut here today on the Market Call, Dryden Pence, Chief Investment Officer at Pence Wealth Management. Now, if you want to learn about Dryden and the firm, you're going to go to Pence, P-E-N-C-E, PenceCapital.com. Dryden Pence, great to have you here on Money Life.
Happy to be here, Chuck. Thanks for having me.
We always start with methodology because buys, sells, and holds are meaningless unless you know what goes into them. But also, when we meet a new money manager, we need to know what their style is. So help us out. What is it that you are looking for that's going to make something stand out to you and make you standoffish about something else?
Absolutely. Our investment philosophy is based on a couple of very simple principles. The first one is that human behavior drives consumption. Nobody makes a penny until someone decides to buy. And so if you can get in the thought process of the American consumer or the decision makers, you can understand not only what they're going to buy, but who they're going to buy it from. And those are the companies we pay attention to. Then we take a look at those big knowable themes that are driving a lot of demand, and we try to identify what we call choke points. Now, a choke point is a point and place in time where everything has to go through there to get from where it is to where it wants to be. It's a company that has kind of like a little monopoly, or think of it as a choke point as a bridge across a river. You want to get to the other side, you got to go over the bridge. The guy that controls the bridge, or the company that controls the choke point in that supply chain, well, they have pricing power. And that pricing power then turns into excess earnings. And that excess earnings usually turns into better stock performance. So it's not any more complicated than that, but it's trying to understand what's driving a lot of people to buy something, understanding what that is, and then who controls the choke point in that supply chain. Those companies have the ability to get excess profits out of that behavior. And those are the ones we're looking for.
So summing that up, you like the toll takers and the folks who are responding to consumer demand, which means that you have to be at least somewhat concerned about the consumer, because we have a consumer that, according to all the soft data, hates things right now, thinks everything is miserable, there's all nothing but trouble, and yet they're still spending. And at some point, either their attitude changes or their spending changes. How much is that impacting what you're seeing happening next right now?
A fair amount, but two particular things. We pay closer attention to the hard data than the soft data because people will say things in surveys, but yet perform differently in their own individual decision making. And so this is kind of where we have this curated media circumstance. We have everybody looking at their phones, and you don't have a lot of objective news all the time. So we focus on what people do more than what they say. But then also we look at when we're trying to be predictive about what people are going to do. We follow analysis called Maslow's hierarchy of needs. It was groundbreaking research done in 1943 by Abraham Maslow in advance of us going into D-Day. And what it really says is that a human being's first going to fulfill their physiological needs, then their needs for safety and security, then their needs for love and belonging, then their needs for self-esteem, and then their needs for self-actualization in that order. And they don't vary. And so when people are put under pressure, they revert to the lowest level of where they are on Maslow. That's what drives their demand. That's what's psychologically forcing them to do certain things. It's kind of like, to give you an example, is how many of you know people that went out and bought 75 rolls of toilet paper in response to COVID, right? But it didn't have any gastroenterological effects, but that's what people did. And so we look at these behavioral processes, or if you think safety and security, why do you always have you probably have your mobile phone within 5 feet of you? That's because it's how you know where you are and how you can get help. It goes back to as an infant, you always wanted to know where your mommy was. And so the point of the matter is these are embedded in us. And so these drive human behavior and drive demand factors. And so we try to find the companies that are tied most closely to that. I say, you brought up toll takers. Yeah, I don't care what's in a truck. I want to be the toll road. I'm going to make my money off every one of them.
So, given that, right now, what is the industries or two that you're leaning into? What are the sectors where you're finding that works best for you?
A couple of areas that we think are very important are the first ones. We look at transformational technology. Right now, we're in this whole AI revolution that we have. There's two phases to that. There's the infrastructure of it, and then the implementation. We're just in the infrastructure level. So getting enough chips, getting enough technology, getting these foundational things done are very, very important as we're trying to advance the next wave of labor productivity going forward. So when we think about that, we look for transformational technology companies. And those have two characteristics. One, they're either big and spend a lot of money on research and development, or they're brilliant and they have one particular thing that they do really, really well. And so as we're looking at that, companies like Taiwan Semiconductor is absolutely essential because it has 90% market share of the advanced chip manufacturing. You've got to have all of this if we're going to build out AI capabilities. So they occupy this choke point. And if you think about NVIDIA is the choke point for AI in the future. Well, Taiwan Semi is a choke point to NVIDIA. And then you've got other companies like ASML, which is absolutely essential. They make the extreme ultraviolet light equipment that makes these chips. And if you don't have ASML, you can't have Taiwan Semi. You don't have Taiwan Semi. You can't have NVIDIA. You don't have NVIDIA. Then we don't have AI. So we break apart these supply chains and identify the absolutely essential companies because they're going to have a long backlog of orders. They're going to have a long backlog of circumstances where they have to be bought. And that means they have pricing power. And we think that those earnings are going to be persistently better for a long period of time.
And are you okay owning multiple ones because you've got that step? Like for you, obviously, TSM, Taiwan Semiconductor, ASML, and NVIDIA all in there. Would you own all three, or would you zero in on one or two of them?
You would own all three, but sometimes you're going to play with the weightings, right? You're going to look at all of these are essential to the supply chain of what's going on, but you'll look at the weightings. If you take a look at, another big thing would be online shopping, right? So if you look at the essential companies of online shopping, you have to have a device, which is going to be, a company that's either going to be Apple or Microsoft, and then you're going to have Amazon, of course, but then you have 2 or 3 other companies that are essential to online shopping. Walmart's number 2 to Amazon. You've got Shopify is important to those things. But you might have different weightings. So as you look at the experience that goes on, then you're going to have different weightings as you look at that behavior. Same thing, online shopping, you're going to have a credit card, right? So it's Visa, MasterCard, American Express, PayPal, all of those type essential companies to a particular behavior that a consumer is doing. So we look at each of them. We tend to try to pick only one, maybe two that occupy the absolute choke point. And then we vary our ownership based on the weightings of that in a portfolio.
And what makes you sell when you have these great stories and you're talking about transformative industries and technologies, you're talking about things that are so essential? What, if anything, makes you wind up saying, okay, I have to change my mind about a key player in this space?
Sure, sell discipline falls into one of 3 areas. So every quarter we're looking at every holding we have. We look at every it's the thing that we have and make sure that it's still the right thing. So the first thing we're going to review is the big knowable thing. Is everything right with the big knowable thing? Then the second thing we're going to look at is everything okay with the choke point? Is the choke point still intact? And then the third thing, we'll look at the individual company. And so like when you look at one of the big things, here's a perfect example, right? When we looked at aerospace and the demand for airplanes, right? There's only 2 major manufacturers, right? There's a demand for aircraft. So then we looked at, who are the manufacturers, Boeing and Airbus. But, Boeing kind of lost its mojo for a while, and they were building planes that couldn't fly very well. And so that affected the stock of the company. So we looked at, there wasn't anything wrong with the big noble theme. There wasn't anything wrong with the choke point, but they began to have an execution problem. So then we began to say, okay, maybe Boeing's not the right company, but maybe GE Aerospace is, because they're making the engines that are going on the planes. And you can't fly a plane without an engine. So then we kind of look at that, and you 1 fuselage, 2 engines. Let's go for the engines, and therefore we began to look at a company that didn't have execution problems as much, but still had these tremendous demand factors. So that's where you would look at varying and why you would sell. Right? Is something wrong with the big knowable theme? Is something like no one buys wagon wheels anymore. You could be the most magnificent wagon wheel manufacturer, but it doesn't matter. No one is buying wagon wheels. Or what's the choke point? For a long time, Cisco was a choke point in routers, but then everybody became in the router business. So that goes away, right? So you wouldn't do that. But then the thing is get down to the company. So those are our 3 criteria, and we look at them in that order.
Well, now we're going to get your quick and dirty take on some stocks that my audience is particularly interested in.
Quick and dirty.
Always account for variable change.
Well, in fact, what you just heard Dryden Pence say was that he is looking for the variables to change, but he's also looking for the things that are driving the industries. And Dryden Pence is Chief Investment Officer at Pence Wealth Management. You can learn more by going to Pence Capital, the firm located in California. Quick and Dirty is our lightning round. It's where we put our guest to your test. If you want to test future guests on the show, send your name, your hometown, and the ticker symbols you're interested in to Chuck at MoneyLifeShow.com. We'll add them to our list and hope they make it into an interview soon. I'm going to start with a bit of a softball because we heard you touch on it. You were really talking about why you wouldn't necessarily go for Boeing, but in there you mentioned GE Aerospace. Amy in San Diego and Dale in London, Ohio, both want to know about GE Aerospace, which now has the ticker GE.
So absolutely. The point of the matter is we talked the big knowable theme, massive demand for aircraft, massive long-term demand for large motors for aircraft and engine. You only have a couple of manufacturers in GE Aerospace now that they've divided up the company and they're specifically focused on that. Now they're able to really unlock the long-term profitability of their company, of their ability to supply those. You have a long-term demand. You're going to have a backlog. And we think that the attractiveness of this company as an absolute niche player here is got really long legs.
And so, well, it's not really coming down for a landing soon, but Lots of travel left and soft landing on ticker GE. That's GE Aerospace. That was an overweight. Les in San Diego and Dave in Jacksonville, Florida want to know about CrowdStrike Holdings, CRWD.
Absolutely. I mean, security is one of the most important things we have. As the world has now, everybody has a device, everybody is online, everybody is using these. And as the world has gotten into the situation, being able to protect yourself from cyber attacks is very, very important. And CrowdStrike has a subscription model that allows them to not only bring their expertise, but kind of once they have you hooked, you're hooked for a long time. So we think that the very long-term subscription model for cybersecurity is extremely important, and we think that the fact that they have a premier product that they're able to have a subscription model on for a long period of time is something that everybody, people are fearful, and one of the best ways to get somebody to buy something is to make people afraid not to have it.
And so that's a buy or an overweight on CRWD, CrowdStrike Holdings.
He either gets on board or he gets left behind.
Richard in Chula Vista, California wants to know about ticker symbol ACM. It's ACOM or AECOM, however you want to pronounce it, but AECOM is the name of the company, ACM, the ticker symbol.
So one of the things that's very important, they are absolutely dominant in construction, water, roads, and bridges. And we have got to, in this country, if you look at the demand signal for roads and bridges, and they're part of many of these, if you took every one of the 45,000 structurally deficient bridges in America and put them end to end, it would stretch from Seattle to Las Vegas. And we have already gotten $500 billion authorized by Congress to begin to rebuild all of these bridges. And that's about $500 billion against a $1.2 trillion need. So we think that somebody like AECOM over the next number of years are going to have massive demand for what they do, because we just have to rebuild the infrastructure of this country. I mean, the world spins around at 1,000 miles an hour. Things get old. You got to replace them. And AECOM is a dominant player in the engineering and highway construction area. So because of that, they're going to get a big chunk of this $500 billion, and it's going to be money good for a long time. These contracts tend to run 7 years on average, and they're able to be dominant in the play.
And so we're talking about somebody in the construction area. We're looking at building.
Way to build equity.
And yeah, AECOM, ACM, the ticker symbol, way to build equity. That's a buy. Pat in Swansea, New Hampshire wants to know about General Motors, ticker GM.
Well, for us, GM is not the best option for automobiles at this time. One, they have a lot of their production outside the United States, which makes them subject to this tariff debate. We still don't know what that's going to be or the extent of it. So their circumstance is they have a supply disruption problem that they could have, or a pricing disruption problem that they could have. And so in terms of how they're going to deal with all of this, we don't look at General Motors as the premier opportunity for a U.S. automobile manufacturer. We think there's probably other better opportunities out there, and we would tend to underweight that because they've got a little bit greater exposure to tariffs and trade than the rest of the market. It's just too uncertain right now.
You say underweight, we say, okay, maybe not a full-on crash, but one way or the other, skidding halt, a stop, a sell, an underweight on General Motors, ticker GM. And last, another request from Richard in Chula Vista, California. It's Applied Materials, AMAT.
So we like AMAT. The thing is we talked earlier about the massive demand for semiconductors and semiconductors equipment. And so as we're doing this AI build out for a long period of time, as we move forward, because when we look at AI, when we look at technology, it's kind of like we're just laying the track of the Transcontinental Railroad. We're at the very early stages of this. And so AMAT is is a supplier of the equipment that's necessary to build the semiconductors to make the rest of this work. So we think they occupy a choke point in the supply chain. We think they're going to have a tremendous deep demand for what they do over a long period of time, and they're going to be in the part of the forefront of the next wave of technological transformation in this country that's going to increase labor productivity. So that's going to be what's important, because that's how companies increase profits.
And so we finish on a high note because Applied Materials, AMAT, again, in that choke point, all the things that would make Dryden Pence say,
I've got a good feeling about this.
Yep, that's why he's overweight the stock and why you might consider it too. Speaking of good feelings, well, it's been great chatting with Dryden Pence, but we've come to the end of our time. Dryden, thanks so much for doing this. I hope to come back and do this with me again sometime.
Thank you very much. We've enjoyed it.
That's Dryden Pence. He is Chief Investment Officer at Pence Wealth Management in Newport Beach, California. Go to pencecapital.com if you're looking for more information. And we will come back. We'll tell you where Dryden agreed or disagreed with some recent guests. And then after that, we'll cross the finish line together. This is Money Life. Stick with us till the end.
To navigate today's complex market, investors need accessible, quality research. Vetify offers free webcasts from portfolio experts and industry leaders. Earn CE credits and take your portfolio to the next level. Go to etftrends.com/webcasts and learn more.
We're back to wrap things up on the July 2nd edition of the show. I hope you enjoyed Dryden Pence. I like that one. I thought that was good, but you let me know what you thought. Chuck at moneylifeshow.com is how you reach me. Let's dig in because there was a bunch of crossover there. As he started talking about what really worked for him, Taiwan Semiconductor, TSM, was the first thing he mentioned. Greg Halter from Carnegie Investment Council was buying it on March the 27th. Tom Plum from the Plum Funds was buying it on Valentine's Day. Dan Kim from Saturna Capital liked it on February the 5th. John Dorfman from Dorfman Value Investments, who will be back on the show basically at the end of this month, was buying it on January the 13th. Then there was ASML. Dan Crowley from the Night View Fund was buying it on January the 22nd. Skip forward and you had Amazon. Dan Crowley from Night View Fund had that as his poster child on January 22nd. And a day later, it was a buy for Ken Mahoney from Mahoney Asset Management. Moving on to quick and dirty. CrowdStrike was a buy, was an overweight. Jerry Steed from Procyon Partners was buying it on February the 12th. General Motors, underweight or sell. It was the poster child for Cynthia McLaughlin from VMQ Stocks on December the 23rd. That's a little bit more than 6 months ago, but you have to think back to the VMQ Stocks methodology, which is a long-term thing, to know whether or not you would, there'd be strong disagreement on those two, basically, is what I'm saying. And then Applied Materials was an overweight or a buy today. Elliot Gu from Energy and Income Advisor was buying it on February the 20th. This was also a buy for Craig Gaventer for Focus Partners Wealth on February the 3rd. And again, John Dorfman from Dorfman Value Investments on January the 13th. Tomorrow, Jose Torres, senior economist at Interactive Brokers, will be here. We've got Kyle Brown from Trinity Capital. That's for the Navigator segment, talking BDCs and some of the stuff that Herb and I talked at the end, because Trinity Capital, 14% yield. And you will hear Kyle Brown talk about that yield. So you may be very interested and think back to what you heard from Herb today. Todd Rosenbluth, of course, has the ETF for the week, and Christopher Zook from Kaz Investments, unless we decide to hold that till Monday, which we might for other reasons just having to do with timing of the show and where everything else is. Meanwhile, if you're looking for something to celebrate today, you might not know what you're supposed to celebrate.
I forgot.
Because it is I Forgot Day.
I forgot.
It's also Made in the USA Day. Go back and look at and listen to the interview I did with Sarah Bongiorni about how hard it is to avoid Made in China, to understand Made in the USA. Yeah, it's its own thing. It's World UFO Day. It's National Wildland Firefighter Day. And on the alcohol front, it is National Anisette Day. My guests today were Anthony Holds. Tony Holds is principal at Holds Wealth Advisors. We were discussing Northwestern Mutual's 2025 Planning and Progress Study. Direct link to that in our show notes and on our guest page. The incomparable Herb Greenberg, editor at Herb Greenberg's Red Flags Alert, herbgreenberg.com. And again, there's a direct link to the story we discussed. Plus, Dryden Pence, Chief Investment Officer at Pence Capital Management, pencecapital.com. Thanks to them. Thanks to Rob Floyd, my producer. Thanks to Maho, my dog. But mostly, thanks to you for being here, because you make this special one worthwhile for me each and every day. The Money Life quote of the day is particularly appropriate given that Herb Greenberg discussion, and it comes from James Dines, who said, if you hear that everybody is buying a certain stock, ask who is selling. Yeah, please do your diligence, keep things in perspective, including your greed and your fear. But mostly remember that until we do this again the next time, the best thing you could do for your money is not worry too much about it. Have a great day, everybody. Stay safe and calm. We'll see you here again tomorrow.
People who appear on Money Life are here for your and their own entertainment. Don't take advice from us or any other podcast without doing more research and/or consulting your financial advisor. We believe our guests provide reliable information, but we can't and don't guarantee the accuracy or completeness of their statements. Opinions expressed on Money Life are those of the host and guests only and reflect their personal thinking. They're not representative policy or strategy of any employers or sponsors. This show is produced by Money Life Radio, which retains all rights to the content. If you want to use any part of this show for your own purposes, be they good or evil, you must get our written permission first. And remember, with great financial information comes great responsibility. Please act responsibly.
Oh, hey, I'm sorry. Forgot to drop the mic.